Hello, it's Bruce Youngblood, pensionsolutionscanada.com. In the news, banks have laid off a lot of people. One of them, 2,700 people. So, if you are one of those folks, what are your options going forward? Right off the bat, you may not like your employer anymore, so maybe you want to move the money out. That's called a commuted value, and it can also offer a copycat annuity. Some folks say, I really like the idea of a pension, but I don't want to stay with my employer. We see that a lot in the manufacturing site or in smaller corporations, smaller companies. So the commuted value allows you to buy a pension, let's say from Sun Life. So whether your company stays in business or goes out of business, doesn't matter. Sun Life pay the pension for life. Um, So anyway, what are your options? Well, commuted value is one. The other is if you are out on the street and somebody offers you another job, you say, "Hey, would you like to take over my defined benefit pension plan?" So governments, in my experience, tend to say yes. Private companies or corporations tend to say no. But if you're going from one bank to another or a bank to an insurance company or something of that sort, definitely ask the HR before you accept the job. Will you accept a transfer of my existing pension plan? Okay. And that means that whatever, plan you have, your credit just moves over to the new employer and they take the responsibility. So, um, what are your other options? Well, you can, of course, very likely take the pension. Now, if you're 45 years of age, you might not be able to start it until 55, which is very common, 50 or 55. Um, Got to look at that carefully because it may not, maybe it doesn't grow between 45 and 55. I've seen that happen. So it's a math question, which tends to point you towards the commuted value. Because the overriding issue, of course, is, hey, Bruce, I'm going to go back to work. I'm going to make good money. And if I collect a pension on top of that, I'm going to be losing, a third or more to tax. So it does make sense to delay tapping that money. Um, the last option that I sometimes see, rarely see, honestly, Ford offer it is a deferred pension. So you resign today and you say, well, don't start my pension for 5 years at a higher amount. So the math looks good. And you're not taking money on top of a new salary and paying a lot of tax. You're delaying, uh, which is similar to the commuted value where hey, give me the cash. I'll swallow the tax problem, invest it. And by the time I'm 55 or 60 or whatever number, that money will have grown and will offer me a larger pension. So there you go. So my rambling. So if you're out on the street, the bank laid you off, give us a call. You're looking at one, transfer of your pension, two, take the commuted value, the copycat annuity, have a look at a deferred pension, which may be offered, or you just take if you're 67, maybe you just want to take the pension. Give us a call. Actually, go on Zoom. Go on pensionsolutionscanada.com, pensionsolutionscanada.com. My pretty face will pop up. Get a 15-minute free chat with me to talk about you. Thanks for watching.